Hello, it's Paul Scott here. I'm on holiday this week from Stockopedia, so it's the evening, 6 o'clock on 27th of May 2015. I thought I'd try out some new software I've put on my computer to record the screenshot and talk over it and do a sort of 10-minute recap of what I would have put in the small cap value report. So on the screen here you can see investigate.co.uk. What I do is I select the sorry, that's probably whizzing by. I select the results and trading reports option there and hit go. I'm sure most people do as well. So whizzing back to the 7 o'clock ones, and I have a quick whiz through here and see which companies are of interest to me. So the first one that jumps out at me is Cambridge Cognition. That's a stock I already hold and have held for a while. They've made an AGM statement this morning. So let's have a quick look at that. They make software which tests for dementia and cognitive reasoning, which can be used on iPads, and it's good for detecting early stage dementia, but also now, which is when I started to get more interested in the company, is it also can be used for drug testing for new drugs. Performance remains in line with market expectations, that's fine. Contribution from our clinical trials and academic businesses continued to grow in the first quarter, good. A healthy pipeline of contracts, that's good. The return to profitability in our clinical trials and academic businesses enables us to increase investment in our early stage healthcare technology business. Bodes well for the future. Okay, what that's telling me is that they've got a profitable part of the business and a loss-making part, and they're crossing the two effectively. So I would imagine, let's have a quick look at the Stockopedia page. So it's COG, the ticker there. Right, Cambridge Cognition. So I just want to have a quick look at what the broker forecasts are. So it's 12.1 million market cap. It's got a small amount of net cash. Early stage companies, so PE and so on, doesn't really matter that much. Here we are. If you look at the historic figures and the graph that pops up on the right, turnovers and forecast turnover is rising. It's historically made a loss, which I already knew, but it's forecast to move into profit in the current year, and today's statement sounds consistent with that. So overall, I'm happy with that, and I'll carry on holding for another 6 months. So let's go back. What else have we got here? Wizz Air is a company I've not looked at before. Let's have a quick look at that. This is a recently floated budget airline, and the figures look quite good actually. Full year to 31st of March 2015. 1.2 billion, I presume those are, thousands. 1.2 billion euros revenue, and underlying net profit of 146 million. So I can immediately see that's about 11 or 12% net profit margin, which is very good. EasyJet is around about the 10% level as a comparator, so these look pretty good figures actually. Up 67% on the prior year. Where's the earnings per share figure? These are too involved to plough through all of this, but it just here we are, all important outlook statement. Grow capacity by about 17%. That's impressive. No earnings benefit from the decline in fuel prices. Oh, that's interesting, as lower fuel prices feed through to lower airfares. That's worth bearing in mind for when looking at other airlines. Further significant rise in group post-tax profit in the 2016 year. Now that's good. They've given a range, 165 to 175 million euros. I wish more companies would do that. That's the current year, of course. So let's have a quick look at the Stockopedia page. I mean, I wouldn't normally go for companies of this size. You see 758 million market cap. Look at that, stock rank of 98. Forward PE of 14.8, so that's not cheap. I think EasyJet's a good bit cheaper than that, but this is possibly growing faster. Return on capital, the quality scores are all high there. Looks interesting. I'm inherently suspicious of all recent floats, because why did they want to sell, basically? That's the thing. Here we are, historic charts. Those look very good, don't they? I think this one looks worth a look. I would imagine it's got net cash. Yes, it has. Airlines, there's about 200 million net cash there, but that's generally customers paying up front, so it's not really their money. Yeah, looks potentially interesting, this one. So, moving on, let's have a look. We'll go back from Wizz Air. I realise this is incredibly superficial. It's meant to be. It's just a quick glance at things. Now, Plus Markets reported an AGM statement today. Where's that? Here we are. They changed the AGM location here to a Regis office over the road, so presumably because they were expecting a lot more people. It was quite a stormy AGM, although this statement here was issued this morning at 7 AM before the AGM. It gives quite a bit of detail. This statement, there you are, change of location. The trading update sounds positive. I mean, they talk about year-to-date revenues being up, but that's really irrelevant because they've run into this massive regulatory problem in the last 2 weeks where they've frozen. It now turns out they've frozen all their UK accounts, not just, I think it was 55% that they said they'd frozen in a previous announcement. They say it's going to take about a month to remedy these regulated paperwork issues. They've got a very strong net cash position of 92.2 million. I'm long of this stock purely as a trading punt. I don't like the company, but I thought the shares were oversold. So I went long, but at far too early. So I was badly underwater on this, but I kept averaging down, and I've actually got about 2/3 of my money back now of the losses. Now, very interestingly enough, Oscar Williams Groot here on Twitter. This is his Twitter account. He works for the Evening Standard and Business Insider Europe, and he loves food and beer. Well, who doesn't? The interesting thing here is that he attended Plus 500's AGM and he tweeted live from it. And he then posted articles which I'm hovering over now. That's a photo he took from the AGM with the chairman standing up there, and I think that's the CEO there. Apparently quite a fractious AGM by Oscar's account. Yeah, there we go. Plus 500 just admitted that all of its UK accounts were frozen. Now, when I read that, I just hit the sell button. I've sold 80% of my Plus shares at £3.3, I think I got for them earlier, and that was a good decision because they dropped Morningstar here to close the day at 271. So I saved myself several £1,000s by going for the sell button promptly when some unexpectedly bad news appeared, and I tweeted out at the time that I'd sold 80%, but I'm keeping the balance. I just have a feeling there could be more bad news to come out here. I don't trust management, to be blunt. I think their answers given at the AGM were evasive, and several of them just didn't stack up as far as I'm concerned. So I think the stock probably will recover, but it wouldn't surprise me if it has another drop down to the sort of 200p level. I remain a holder, but on a much smaller scale than I was yesterday. Tungsten is another one that's been in trouble recently. It got away a 90p placing last week. Again, I'm out of tungsten. I sold out a while back, sort of just above, around about 200 to 230, 240 in sort of stages around that time. Can't remember exactly the price. It's now 99p. They did a placing at 90p the other day. It shot up on that, but it's dropped back again 11%. I can't really see any reason for it to be above the placing price because they didn't raise enough money. And look, the market cap is still substantial. That's at close of play yesterday, so it will have dropped to about just over 100 million today for a business that really is losing cash on a pretty epic scale. 20-30 million a year losses, so it's going to have to raise more money. Okay, I'll leave it there. We've run out of time. Bye.